On a quiet morning in Nairobi, a street vendor taps a phone instead of opening a cash register. In Lagos, a trader settles payments without ever stepping inside a bank. And across Africa, more money now moves through mobile phones than through traditional bank branches. This isn't a future scenario, it's already happening. Africa now processes over $1.3 trillion in mobile money transactions every year, more than the rest of the world combined. In 19 countries, mobile wallets have overtaken banks as the primary financial account for adults. But to understand how Africa quietly became the world's most advanced mobile money economy, we need to go back to a time when most Africans had no bank account at all.
Welcome to Spotlight in Africa, where we provide the clarity, data, and intelligence investors need to understand Africa's evolving markets.
For decades, Africa's financial system was built for the few. Traditional banks clustered in cities demanded paperwork many citizens didn't have and required minimum balances that excluded millions. By 2011, only about 23% of adults in sub-Saharan Africa had access to a formal financial account. For rural households, informal workers, and small traders, cash wasn't a preference. It was the only option. Then something unexpected happened. Instead of expanding bank branches, Africa leapfrogged them. The turning point didn't come from Wall Street or London, it came from mobile phones. As basic mobile penetration exploded across the continent, telecom operators and fintech innovators realized something radical. You didn't need a bank to move money, just a SIM card. Kenya's M-Pesa became the proof of concept. What started as a simple way to send airtime quickly evolved into a full financial system: payments, transfers, savings, even credit. And the model spread. By the mid-2010s, mobile money wasn't just an alternative. It was becoming the backbone of Africa's financial infrastructure. The numbers tell the story. Since 2011, financial account ownership in sub-Saharan Africa has surged from 23% to nearly 60%. One of the fastest financial inclusion shifts in modern history. Roughly 40% of adults now hold a mobile money account, far above the global average. Countries like Kenya, Ghana, Tanzania, Côte d'Ivoire, and Senegal built dense digital ecosystems, offering instant payments, domestic and cross-border remittances, savings products, and microcredit. Crucially, this growth wasn't driven by banks, but by low-cost digital rails. Fintechs didn't replace mobile money, they expanded it. In Nigeria, massive agency banking networks now onboard millions of customers through neighborhood agents instead of branches. In Ethiopia, telecom liberalization is unlocking entirely new wallet ecosystems. And across the continent, players like M-Pesa, Wave, and OPay are building fast, interoperable payment rails that increasingly cross borders. Africa wasn't copying global fintech models, it was inventing its own. Yet for all its progress, Africa's inclusion story is still unfinished. An estimated 350 to 400 million adults remain unbanked. Women are 20% less likely than men to own a mobile money account. Rural communities face thin agent networks, limited connectivity, and lower digital literacy. Smartphones remain expensive. Formal IDs are still out of reach for many. Inclusion has accelerated, but not evenly. And that imbalance defines the next phase of the story. Africa is now entering its most consequential phase yet. Governments are digitizing salaries, pensions, and social transfers. Regional blocs are pushing interoperability. And the Pan-African Payment and Settlement System, PAPSS, is lowering cross-border transaction costs, laying financial infrastructure for the AfCFTA. Meanwhile, fintechs are moving beyond payments into credit scoring, SME finance, embedded lending, and wealth tools, supported by stronger regulation and emerging digital ID systems. For the first time in history, a region may achieve mass financial inclusion without banks as the primary driver. Africa's financial revolution isn't just about convenience, it's about capital formation. Every new digital account expands the formal economy. Every transaction creates data. And every inclusion gain strengthens markets, tax systems, and investment readiness. If this momentum holds, Africa could become the first region where digital finance, not legacy banking, brings hundreds of millions into the global economy. Not by catching up to the world, but by redefining it.
For more intelligence on Africa's economy, finance, and capital markets, subscribe to our channel at Spotlight in Africa.